Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Sylvan.
Switzerland is producing world-class startups, so why do we keep selling them so early? In the past few weeks alone, a Swiss deep tech company gets acquired by Amazon just 3 years in. A 3 billion quantum startup chooses Nasdaq over Europe, and massive rounds are flowing into deep tech, but only to a selected few. Those look like wins, but they're also exposing something deeper. Are we building global companies, or are we just feeding bigger ecosystems? Are we funding innovation or deciding in advance who gets to win? In this episode, we unpack what's really happening beneath the headlines and what it means if you're building in Switzerland today. Hello, everyone. Very warm welcome to a new live stream here with us at the Swisspreneur studio. We're going to have our resident guests joining us here. Laurent, the co-founder and co-CEO at Holy Code, is with us today, and he's joined by Sophie Lamparter, partner at Vitamin C, recently launched and announced venture capital with a fund of 20 million US dollars. Great to have you both back here, and we're well welcome.
Thanks for having us. And Sylvan, this is Swisspreneur. We cannot start a minute late. Come on, this is not Swiss.
I know. You know, I started test recording instead of doing the right recording, so please bear with me. However, we have a lot to talk about. Last month, you made some bold wishes or bold announcements. We're going to check, of course, what happened. And I think we have plenty of material to talk about. But before we go there, I always like to ask you a little warm-up or introduction question. Sophie, you launched officially the communication about Vitamin C with your 20 million US dollar fund about 3 weeks ago. How were the reactions? What happened since the launch over the past 3 weeks?
Yeah, I think the feedback was great. You know, it's not an easy time to raise a fund, full stop. It's not an easy time to raise a climate fund. It's a bit contrarian. We obviously think the opposite, right? We think that every fund will be a climate fund, right? Like we're talking about the future of economical infrastructure, and this will be renewable. This will be circular. There's just no other way forward. But it's not quite yet what, the big audience or let's say the general public is talking about. It's also not what the current administration here in the US is talking about. But yeah, we feel like it's exactly the right time to start a climate fund. And yeah, we'll see when we look back in the next 10 years, right? That's the challenge, I think, with venture capital. We'll see the success of this fund truly only in 10 years. Yeah. And so it's great to get started. A quick correction. So first close is at 20 million. The ambition is to raise 40 to 50 million. Yes. So we'll be busy this year, starting with first investments and fundraising at the same time. Yeah.
You see, that's sometimes the challenge because people like me, sometimes you read the headlines and then you see, 20 million, that's the first close, but then you don't see the bigger picture. And I would assume if you were an American fund, you would say, we start our 400 million fund or 1 billion fund. And then somewhere small in the text, you say, we closed 20 million.
Yeah, we didn't want to do that. I know a lot of funds do that. We didn't want to do that because we're very proud of the first 20 million. Yeah.
Of course. Yeah. Hey, it's super exciting. Congrats on the launch.
Thank you.
Really cool.
Appreciate it. And it was great. Like the response was amazing. Like you can feel that there is a need for more funds, new funds, climate tech funds. Yes.
I'm glad that you're tackling this very, very big problem that sort of affects all of us. Laurent, over to you. Last month, you said you were hoping for bigger signals. And I think we probably got at least some of them. Amazon acquires an ETH spinoff. We have a Swiss company, a quantum company, that actually is preparing for a Nasdaq SPAC IPO. Do we finally have these big signals that you were wishing for last month?
Yeah, I'm not sure. I think we talked something about, billion-dollar exits and stuff like that. So not quite there. But I would say the direction is really positive, Amazon acquiring them at the river. That's a cool signal because it obviously brings more attention to the Swiss ecosystem again. It being Amazon brings a lot of also US eyeballs to our country. So I think that's good. That's absolutely fantastic. And I congratulate the founders for this. It was 3 years, I think, after founding. So yeah, massive timeline for a deep tech company. We also sold Movu back then after 3 years, but that was a digital SaaS company. You know, that's not the same challenge at the end of the day. So that is massive. And then the SPAC, okay, cool. Good announcement. It hasn't happened yet. And we know that SPACs are not always a fantastic thing. So yeah, let's wait and see how this pans out. But overall, yes, I also agree with you. There's been a couple of really nice positive signals in the last month. Now let's amp them up another 5 times or 10 times. And then we're sort of where I want to be.
Yeah.
I don't know how you felt. When I read the river thing, I had like 2 feelings right at the same time, right? One like, wow, this is amazing. This is great for ETH. It's great for Switzerland. And wait, why did they sell so early, right?
Exactly.
So, you wonder sometimes, like, yeah, why that keeps happening in Switzerland, and why I don't know the founders, I don't know their reasoning, but I'm sure there would have been a potential to keep going, right? But for some reason they decided only after 3 years to sell, and I'm sure the outcome for them individually was great, but we talked about this earlier, right? The impact on the ecosystem could be much larger if they actually take it big.
Yeah, but I think
it sort of follows the same pattern, right? Like you have a great technology, you prove that it's working. Like it's this ETH spin-off, right? River, formerly Swiss Smile, I think they were called when we had them on the podcast in the early days. Then you prove that it works. You have Amazon as investor. And then they see, okay, great, you've proven it works. The technology is the new thing. And now we add the whole distribution and rollout. And we basically acquire the whole thing because otherwise it will get too expensive. So it's sort of, we have the technology, we have the breakthrough, but not the commercialization. And we are not reaping the fruits of that technology getting actually built into businesses.
Yeah, and for someone like Amazon, this is great, right? Like, I don't know. Amazon is run by a Swiss woman, and Franziska Bossart. I don't know if you ever had her on the show. She's great.
We're in touch. Yes.
Okay, great. She used to run like ABB Ventures, and now she is. I mean, she's managing $1 billion for Amazon, right? That's the industrial tech fund. That's mostly robotics, and of course, she's like very close to the Swiss ecosystem. So she looks at like all the robotic spin-offs and I was in an evening panel with her once where we talked about the Swiss ecosystem, and I came in and like, we have a scale-up problem, right? And like, it's an emergency. And she was like, it's fantastic, right? Everything works wonderful in Switzerland. But then I realized, well, of course, right? Amazon doesn't want massive scale-ups, right? They want to invest at seed stage, and then they want to test that tech is working, and then as soon as possible, they want to incorporate them and use it, right? And don't want to pay too much for it. So yeah, it depends the perspective, right?
I think, as you say, from an Amazon perspective, this was a fantastic deal. I don't know the exact details, right? But that was a fantastic deal. They get a really, really cool company early on. Now, from the River side, the question is, would they have been able, without the backing of Amazon going forward, to build something, almost a category defining company by themselves? And probably they themselves came to the conclusion the risk is too high compared to what they have now with Amazon, which is a bit of the Swiss way, I would say, without actually having talked to them about it. So, Silvan, what I think we should do, you should invite them to a podcast again and ask them exactly those questions,
Absolutely.
What made them go for this case after 3 years? I think for them anyway, it's life-changing money, as we talked about also in the last show, that as soon as you step across that bridge, it's going to be difficult to keep founders chasing more if you don't do good secondaries in certain rounds. And maybe that didn't happen for them. And then it's easier to just say, I'll take the life-changing money. Maybe they got an amazing opportunity within Amazon as well. We never know. So get them back on the podcast and let's ask them. I think that's
We're also in touch, actually. It's funny that you say it. Yes.
And especially with deep tech companies, right? You also do the math. How much more money do I need to raise to really bring this to scale? And how much dilution will I have to accept as a founder? And so maybe the outcome is similar, right? Selling today or trying to scale this another 5 years, right? Or the risk that it's not actually working.
Right.
Yeah.
And they didn't disclose the numbers, but from what we were able to find, they raised about 25 million US dollars, and their latest valuation was probably around 100 million. So the official deal terms, they were not disclosed, but I think that's a good sort of estimation in terms of the guesswork, what the size of this exit could have been, more or less.
And so you could assume that the founders still have maybe 70% of the company, right, at this stage, if they own, or 60. So then it's a nice outcome.
Yeah, for sure.
Yeah.
And hopefully, at least this part, they can now take that money and reinvest it in the next generation. That could be a good start.
In Switzerland, yes.
Absolutely.
In Switzerland,
absolutely.
yeah, of course. Yeah. And I wonder also, there's this like really interesting combination, right? The physical AI space. I think it's super hot and well talked about, written about. Is that something that you as an impact investor also pay close attention to, Sophie? Because it sort of seems like there's a huge potential, and that's sort of still just the beginning, because there's so much more to come with this AI and the physical robotics combination.
Yeah, no, absolutely. And then if you look at this kind of like mega rounds that are happening now, there a lot of them are now in physical AI here in the Valley too. It's like humanoid robots, other types of like, it's really now, how does AI come to the physical world? I think that's the big next unlock, right? After the AI LLM world. So yeah, it'll be interesting. I don't know.
For sure.
We see now a lot more like little robots already cruising around in the city, like the little like package delivering, and of course the autonomous vehicle. I haven't seen any like actual humanoids one working, but yeah, we're getting closer.
And Laurent, I was listening to a random finance podcast this morning, and there it was a guy from Germany, and he was basically, look, I'm very sort of doomed about Germany. Like, I know many people are saying that about Europe and Germany, especially these days. But he was like, look at Germany. We have no AI model. We have no access to a lot of hardware, and we don't have enough energy to power all of that. Like, we're basically way, way, way behind the US or China in that sense. I don't want to enter this doomerism again, but it's sort of also a bit of like, okay, ETH, great technology, but then we probably sell too early. From a European perspective, or also German perspective in that sense, what does that mean, this lack of infrastructure or capabilities for actually building these startups and these physical AI companies in Europe?
So I think, you can think of Germany whatever you want at the end of the day, but a lot of the people, and I think a lot of the market, actually see that Germany at this point is super over-regulated, very bureaucratic. When I talk to founder friends of mine, and also my own experiences there, was like, we try to not hire in Germany because it's just such a nightmare if you ever want to get out of an employment contract. So I don't think they've done themselves a lot of favors in the last 10, 15 years. And what do you say about, electricity and power supply? That is definitely the case. But I think this is a problem that everyone faces, also in the United States. Yes, they have more, but with the big LLMs that they have and the big data centers that they're building, electricity and power, I think we touched on that before once, it's scarce resource everywhere. I think the only country in the world that is really, really doing a good job in this currently is China. China is investing so heavily into building any kind of sustainable and non-sustainable forms of power. That's actually the only country at the moment that I think is actually doing this really well. Even if you look at Switzerland, we've decided to go out of nuclear a couple of years back, or a bit more than a couple. And now suddenly, the tide is maybe turning. We're talking even the Bundesrat, so the national, let's so say, our president sort of, are talking about bringing it back. So I do think we've put ourselves in a difficult situation as Europe, but especially Germany as well. And there's not a quick fix for this. This is going to take 10, 15 years to solve. The LLM topic we've anyway lost. I mean, there's no way of trying to build a European LLM that can work against the big ones. That ship has sailed a long time ago. But for physical AI, there I don't know really. Like, I'm a bit more optimistic in terms of we still have in Europe a lot of manufacturing power, a lot of specialized companies that know a lot of these things very well. So I do believe that actually that's an area where Europe could actually perform really well. I'm not going to say number one. Maybe they can. I don't know. I'm not deep enough into it to challenge that. But from what I see and what I hear and the people I talk to, I think there's a lot of very, very good, knowledgeable people in the millions in Europe in this industry that could be in the robotic industry in the future. So I'm not as doomsday on that part. The other two parts, definitely, we're in a very bad spot.
Fair enough. Sophie, your US perspective on Switzerland. Many people say Switzerland has all the ingredients to be the number one hotspot for robotics or physical AI. Do you see that also like coming from the US, that they say, yeah, Switzerland is the place to be, or is Switzerland even on the map from a US perspective? Now, maybe with the Amazon acquisition, who knows?
No, even before that, I think that has changed in the last noticeably 2-3 years, or even that ETH specifically is on people's map, and knowing that it's like really at the forefront for robotics, even like computer vision, AI. I think that's sunken in. Everybody knows what ETH is. Like before that, like I came here 15 years ago, and that wasn't really like a name that I had to explain. It's like the MIT of Switzerland. I don't have to do that anymore. But and that's not just for Switzerland, that's in general for Europe. Most Americans think that there's a cap on how big companies become. And there's data also speaking to that, right? So I think that we still need to prove. Like, it's obvious that there is talent and potential and IP and massive opportunity, but we need to prove that we can scale things. And that's why I don't love River being sold to Amazon so quickly, right? Because we should really show that we can build our own, big companies, category leaders. And like Laurent said, like we would have the industrial capacity to do that, right? We have companies in Switzerland like ABB, right? They should help scale that.
Yeah.
So,
Talking about big companies, I want to move to the second topic, to Terra Quantum. It's a St. Gallen-based company. They actually signed a non-binding LOI. I know it's still very vague and not happened. It hasn't happened yet, but they want to merge with Mountain Lake Acquisition Corp. So they basically want to do a SPAC. So valuing the company at $3.25 billion with a B, not with an M. They have customers like the US Air Force, where they focus on quantum algorithms, software, security, and a lot of other stuff. So they chose a SPAC over traditional IPO, and they chose Nasdaq in the US over SIX in that sense. So I just wonder a bit how you guys see that move. First of all, it's cool to see a company preparing to go public out of Switzerland, although it hasn't happened yet. And also, I would say the volume is pretty decent. On the other hand, it's again happening in the US and not in Europe or Switzerland. So I wonder a bit, how do you see that, Sophie, listing in the US instead of Switzerland, or at least Europe?
So I have mixed feelings about that one too. First of all, I didn't know SPACs was still a thing. I thought that that was an experiment 2020, 2021, and a lot of them have completely failed. So I don't know. Then the second, like you said, yes, it's an LOI. You still have to close the deal. You still have to bring it on the market. And then you have to find buyers for that type of valuation. So, we have seen SPACs, they went public and then immediately lost 60%, 70% of valuation. So until it has actually happened, I don't think we even know what we're talking about, right? But fingers crossed. I love the ambition, let's say it like that. And I think we also need a lot of that. If companies don't try, then we won't win either, right? So I appreciate that. US versus going to Nasdaq versus SIX. I know you work with SIX sometimes, Sylvan. I know you like managing talks there. You might have a deeper insight there, but it feels like it's kind of clear, right? You have different kinds of investors on the different markets. And the investors that are investing in SIX, these are more the traditional investors, right? They're looking for companies that are profitable. They make 100 million in revenue. And it's a very clear kind of almost conservative investment in that sense, something that you can calculate. And Nasdaq is much more geared towards, opportunity. Has this a potential to scale in the future? So the valuation is based on the future opportunity instead of the today. So for any tech type startup, it just makes much more sense to go in this direction, to have a higher valuation. How we can change this for SIX, I have no idea, right? This is something that really would have to attract other types of investors. We would have to really change the mindset. We would have to have a couple of experiments that go successful that would change how companies are evaluated. Feels also like we're talking about this culturally between the two countries a lot, right? You see it even in the stock market. It's exactly the same, right? Do you evaluate what's already built, or do you evaluate what it can grow, right? And that's a very different perspective, even from the stock market.
We had at the last event earlier this year, we had Cutis, a tech bio company, on stage, and they did not take any VC money, but they're obviously thinking about maybe going public one day. And by doing the preparation, they actually talked to different analysts, right? And they said it's so difficult to get the analysts in Switzerland excited about your startup or scale up in that sense, because they just value things differently. And for them to then actually put money down, compared to exactly what you said, to seeing the value today, but actually think about where can this go in the future, it is so difficult to build the momentum there and get them excited for a potential scale-up IPO, that I feel you're just sort of trying to start driving a car and make it accelerate while you are still fully hitting the brakes. While in the US, you're more like, okay, this has huge potential, and we try that multiple times. And even if it does not go there, we hit one, and if it works out big time. So even there, the volume seems to make a huge difference, and also probably the track record, that there's not a lot of very successful examples who have done so in the past.
And the risk profile of the investors themselves, right?
How do you see that, Laurent, from a founder's perspective? Because in the end, IPOs would be an amazing thing, right? To bring your company public, if it makes sense. And then you sort of also give more and more people access to the success of your company. But at the same time, it sort of seems that most of the IPO tracks still lead to the US.
I think that won't change, honestly, because as you said, the IPO is probably one of the, if not the biggest thing that you can achieve as a founder. I haven't achieved it myself, so I cannot tell you how it feels. Not yet. But this being such a big goal, and it's being sort of also representative of you conquering the world in a way, right? It's not, if you want to go and do an IPO, you're not going to be a company that just works in one country. You're probably going to be a very global company. By that time, you're anyway focused heavily on the US market, because it's a much bigger market for you. It's the place to go to. So it's kind of logical that this is like the biggest goal that you can have, is to IPO. And if you can, you try to IPO on the best market there is. And today I'm sitting in the building of SIX at Tenity. I need to be a bit careful what I'm saying, but it's probably not going to be the Swiss exchange, right? It's going to be the American one. And I just think that's an area where I'd like to stay realistic. We will not be able, as founders and as investors, in like VC investors into these companies, we will not be able to change that reality in the market. That has to come from somewhere else. That the masses or the big investors actually shift, and I don't think that's going to happen. It's the power law, right? At the end, it's the ones that are the strongest that will get the most. And the American Stock Exchange is just the leader, very clearly.
And I mean, in order to only be able to compete at least a little bit, will be a unified European market, but we don't even have that. So even there, we are fully fragmented, that if you go and list in Sweden or in Germany or Amsterdam, it's so small already altogether compared to the US stock exchange, but we even have smaller fragments of the already small fragment. So it's just an additional hurdle to take that doesn't allow you to compete.
An investor once told me, Bea Knecht, shout out to her, because she was invested into our company, and she gave me good advice once when we were talking about selling a company. She said, look, sometimes it's better to be the first prince in a small kingdom than to be the cousin of the prince in a big kingdom, right? That's sort of what she told me back then. And that defined who we sold the company to. And I think that applies also here, right? So as long as you have the feeling that you're going to be a global success, you want to be part of the big kingdom and you want to list on the best stock exchange, right? And if you know you're only going to be a local player, then yeah, probably you're going to list in Switzerland or Amsterdam or wherever. But the question is whether then you can even list your company, right?
I wanted to say
inherently, you're so big that you can do an IPO, then you want to go for the biggest stage there is.
No. Makes sense. Before we jump to the next topic, I do want to give a quick shout out to the partner of this live stream and podcast, to Swiss Startup Days. It's coming up very, very fast. It's going to take place on May 21st in Bern. It is Switzerland's leading deep tech catalyst event. If you haven't registered yet, the program is also live now. Go to startupdays.ch, check out the program, and that's also the same place where you can actually save your tickets. We'll be there. We are there to meet you. We're there to exchange, to answer questions, and to enjoy some great networking. So join us if you don't have a ticket yet. And with that, I also want to go to the third topic today. We have a lot on the list. I feel it's so much happened again since we last spoke. It's crazy. I want to talk about deep tech fundraising. There's PaveSpace that just raised 40 million. There's Herbert Ventures. They also announced a new fund, 30 million Swiss francs. So quickly dissecting both of them, why they matter or what happened there. EPFL spinoff PaveSpace, they are based in Lausanne, founded in 2024. They raised one of the largest seed rounds in European space, led by Visionaries Club, Creandum, and also others. And the 40 million, that's actually quite a pretty decent seed round. That's like getting bigger and bigger. And on the other hand, we have Herbert, Zurich-based. We also had them on the show actually already. Ben Simon from way back in the days where he was talking about them. Sophie, you invested in them and had a nice exit. So super cool. And they actually focus on deep tech and serial entrepreneurs across Europe. So it's really interesting to see this movement, like stuff is happening. And Sophie, if you look at Pave, just 2 years old, pre-revenue, hardware focused, raising a 40 million seed round. That's really, really decent, if not massive. Is the space angle now the new hot thing to invest in besides AI? And what role does the European sovereignty angles play in here to also maybe drive the valuation higher than normal?
Yeah, it was interesting. I was yesterday on a startup jury with another VC that is investing since '93, and I always love that because then you're like talking to someone who has seen like several cycles, right? And he said very clearly he has never seen such an extreme environment in venture capital like we have today, right? It's crazy consolidation, right? We have, 60, 70% of all the investments go into AI. And within that, 60, 70% in like 3-4 companies, right? So it's like a massive consolidation. And then right beyond that, and we talked about this yesterday on the panel, was then you have these mega rounds, right? Where investors just pulling in money because they define it as like either it's the hippest, hottest thing and it's really more of a party round, or it's really a company that builds some important infrastructure that enables a new market or that enables a whole like industry. And I think that's what we're seeing here, right? Like we have like the first big piece for this like mega rounds is, of course, AI models, infrastructure. Second, physical AI, robotics, and then space is right there now, space and defense. And then, climate and energy, I think, is the other one to power the whole thing. And so there's very much of a winner takes it all dynamic, right? Like, okay, you're defined as a category leader and then money will be pulled in. And so I looked quickly. A comparable US example was Impulse Space. They do exactly the same thing as PAVE. So basically like helping move satellites. And so this will be crucial to actually make that whole satellite market really, really grow and take off. And so they raised 30 million seed. So PAVE doing 20 million seed is comparable, right? And so not quite still, right? It's still a difference, 30 to 20. But yeah, I think it's great because we need to have these European versions of these like real infrastructure that we need to enable a new industry. So I am glad that there are these bold investments happening. At the same time, it also worries me because there's so little capital available for everyone else, right?
No.
Yeah.
I think PayF even did a 40 million. So they even
Did they?
outpaced the
Okay.
US competitor.
Great. Even better. And it's a female CEO, which I'm excited about too, which is still rare.
But one thing I'm curious about is you say there's more concentration. We also talked about this a few months ago. More concentration in fewer companies. And we all know there's the power law, right, in venture capital. So that sort of makes sense. But by doing so with this behavior, you have a lot of money flowing into very few companies. Don't you sort of make that a self-fulfilling prophecy or almost a forcing function where you're like, hey, by having so much money to only a few companies, those are the only ones that can basically succeed.
I mean, you give them a really unfair advantage, right? Like we call that also kingmaking, right? It's like the big funds getting involved, and they can basically make the king, right? Because you just keep pouring money into it. They can do follow-up rounds. Yeah, it's unfair, but that's the reality we're in right now.
And from a VC perspective, that's amazing, right? Because it's sort of, you think you take more risk by concentrating, but maybe if you have this king-making ability, it's actually less risk for you because you sort of have a higher certainty.
But who has the king-making ability, right? These are the gigantic funds, right? So for us, smaller funds, it's like, oh yeah, of course. Now we're looking, we're hoping we're getting something that becomes a category-defining company, and then it's followed up by a king-making type of VC. But the reality is also that 70 or 80% of your portfolio is not that, and is actually has a hard time raising money because they're not that top notch, but they're still really good, solid companies. And that was also a topic yesterday on the panel. It was like some VCs now suggest to their portfolio to reduce and try to go towards profitability because they can't raise right now. So that's also a reality.
I think as you said, kingmaking is a really big thing in this AI era at the moment. I think it's even 60 to 70% of the investments flowing into funds actually go into like 5 or 6 biggest funds in the world at the moment. And then those 5 or 6 funds are the kingmakers that actually put 60 to 70% into those handful of companies. But I think the crazy part that I assume will happen is most of these companies will go public at some point. And the people that will lose are the private investors afterwards that invest into the 4 or 5 of those that are not going to be the winners, right? There's going to be 1 or 2 winners in this that are going to be the runaway successes, and everything else is going to just drop in valuation, is going to lose a lot of money. And it's not going to be the VC investors that are going to lose this money because they're going to cash out on time usually. So it's going to be the private people afterwards holding this company that are going to lose out. And that's the thing that I find very difficult going forward a couple of years, because it just creates an even higher concentration of money and power in this market, right? If it happens like that. I'm a bit pessimistic here, but I do see that this could happen, because if you look at, let's say if you compare Europe and US, just in terms of stock market, if you count out the Max 7, US was actually not doing much better than Europe in the last 10 years. It was heavily driven by this one category of software companies that were super, super successful, right?
Yeah.
And now what we're doing is we're basically creating this new set of upcoming category defining companies, of which some will make it, the rest will not make it. And it will just, again, concentrate much more of the economic power and value in even fewer companies. So I do see this very critical, even though there's not much you can do about it. But yeah, we have to be realistic that if you want to win in this market, you have to be one of the kingmakers' favorites. Otherwise, you're not going to make it.
Mm-hmm. And it feels like venture capital is already that thinking, right? Like every fund already returns the fund with 1 or 2 companies, and now we're just going extremer and extremer on that. It does feel a little bit worrisome, right?
Is that also a conversation that you have with your LPs where they say, hey, why should I put my money in your new fund that is much smaller than the big kingmakers, like, I don't know, Andreessen or Sequoia? Like, they have alternatives, right? And I assume that beyond liking you and believing in your thesis, there's probably a real shift happening there in terms of the LP conversations, I could imagine.
Yeah, I mean, you have to be a pretty big LP to even get into those, right? So yeah. But I did speak with a family office that was doing a lot of emerging funds in Europe, and they finally got an allocation. It's from the founders of Supercell. Finally got an allocation to go into Sequoia. So they decided to put their entire venture capital budget into Sequoia. Right. And I can't blame them if you look at the Sequoia, like if it's just about making money. But what worries me then is like you don't have diversification, you don't have, you don't allow like ecosystems to grow because you just do kingmaking. But yeah, that's definitely a concentration that happens, like Laurent nicely pointed out, along the entire value chain, you could say. And so I think smaller funds like us really have to have an edge to be interesting to LP as well as to founders, right? We say like, hey, we have a specific value add. For us, it's like the European US bridge. For us, it's also like really value, mission-driven impact. We have founders that come to us because of that, right? Because we care about impact truly and we care about founders truly. So yeah, you have to just be able to differentiate and show that you can create value that's beyond just dollars.
No, makes sense.
Yeah.
And another way to bridge that gap or to sort of have an advantage is what Herbert is doing. They launched the 30 million pre-seed fund, and they say they target Swiss deep tech before it's obvious. Laurent, first question, is that the gap that the ecosystem was actually missing? And the second question to that is, how does a founder-led fund management change how the companies get built or what they actually look for in companies they invest in?
I met Ben a couple of times last year, and actually, funnily enough, I bumped into him yesterday.
Oh, nice.
So, yeah, good timing. He's an awesome guy, and I really like what they're doing. So I do think that founder-led funds, have an edge in terms of attracting founders, right? So it's easier for a founder to have a conversation with a VC that has been a founder himself, if that founder is not telling you what to do, but really, takes the right approach in the discussion. I've been in that situation a couple of times. I know a lot of people that have. It just makes it an easier, nicer, and more fruitful conversation on average, right? So I think they do have an edge in that sense. I don't think that there's a lot of cases in the world that prove that a founder-led fund or an operator-led fund is actually going to outperform other funds. I think they're doing a little bit better, but in the end, it's the one or two big hits that you get in that are actually going to make the fund. So it doesn't really matter whether you make a couple of decisions better or worse. It does incrementally change the picture a little bit, but not overall. So I think it's more in terms of being able to talk to the founders and get them interested in having you on board. I think that's the biggest change that is happening there. And then to the first question that you asked, was that missing? I do think that the Swiss deep tech ecosystem can use a lot more funding. It doesn't matter at which stage, because we have brilliant people in Switzerland in this area. I've talked to a couple of people at the Swiss Startup Association Founders Day that came from Europe and said they know a lot of people moving to Zurich or actually looking to move to Zurich because it's a good ecosystem, right? So that gave me hope that there's actually being something built here right now. And what Herbert is doing is just going to add, fuel to the fire. So love it.
Yeah, and great guys.
You would also, like, the goal of a fund is also not, it's just stay with one fund, right? You're thinking about a firm. So ideally you raise a new fund every 2 years, sometimes every year, every 3 years. And so like, that's the exciting part. Like whenever a new fund starts, that this will be a whole series of funds, right? So I was really happy about the announcement. Yeah. Yeah.
And as we all know,
we talked about it right after the exit. Right after the exit, he was like, maybe I should do venture. So we had quite a few exchanges at the early time of his thinking. So yeah, it's good.
And I love that, both like Ben, but also Joel from they're still very engaged. They invest their own capital, they build new companies. And that is exactly what we need. That's the flywheel. You build something, you have a success financially, and then you make it triple down into the next generation. Can be as investor, can be as founder again, as early employee, whatever it is. But just keeping the flywheel spinning, that's the really important part to build the ecosystem and bring it forward. So big kudos to both guys for doing so.
Yeah.
And As we all know, funds also need exit. So we already talked about the River exit to Amazon, but there are also a few other exits happening since we actually last talked. We have Vivior that got acquired by Zeiss. They did an IP acquisition. We have StarMind that got acquired by Capacity. And I wonder a bit there, most of these deals, they were like asset or IP integrations. So there you never really know how good was the deal really. Was it more of an hiring of talent and to save face and have a nice exit? Or was it actually really something nice where you say, okay, now they can scale into the next big chapter from there? So those two companies, Sophie, IP integrations in the same month, what does that pattern tell you? Is it the right moment to exit, or was it more like a last resort? I know it's difficult to say from the outside, but when you hear IP integration or equi-hire in that sense, what's the first thing that comes to mind?
Yeah, probably not a great exit, right? Probably either the company couldn't scale the way they wanted, the way their investors wanted, or the founders got tired, or it just sounded like this. That's another one that could be more frame positive. Like, hey, with this partnership, with this larger company, I can actually have a bigger impact or bring this to a larger market, which I couldn't do on my own, right?
Yeah.
But it does mean couldn't do on my own, right? It's usually means, yeah, that there was. I don't know. StarMind, I think, I did an event with them 2011 in San Francisco.
Yeah, they've been along for a long time.
So it is like 15, 16 years, right?
Yeah.
And I don't know how many people they had this like by now, but yeah, I don't think they could reach that scale that originally was planned. So, but it could still be a nice outcome if the partnership then leads to something where the product continues, where talent is happy in the new role. Yeah, I think it doesn't need to be a bad thing, but it's definitely not like a great outcome that changes the ecosystem or that is hugely celebrated. And I think it's a bummer that with all these exits we're talking about, that we don't actually know what money we're talking about. There's very little transparency. I wish there was more transparency that we could like learn from,
But why is there not more transparency? Is it just more also from the investor side that they say, okay, we only want to publish numbers if we have a good outcome for signaling purposes? Or why is there not more transparency from either side?
I mean, that's one thing. But another thing is probably also that some of the buyers don't want this, right? I mean, if you buy a company, I mean, that happened also to us. None of the companies that I was involved that was sold, the buyer was actually willing to share that. And that was part of the agreement. Like, you're not going to share numbers. If you share, that's also why every time you have founders on your podcast and you ask them, hey, what did you sell for? They're not telling you because they don't want to usually, but because they're simply not allowed to tell you. That's the reality.
But it's my job to ask, of course.
Yeah. I mean, it's great that you do. So, yeah.
But the cool thing is, like, sometimes if it's a publicly listed company, you don't find the exact item in their balance sheets, but sometimes you can get a hint about the total acquisition. Maybe parts of them were publicly announced, and then you can sort of do some calculations to get
but you
estimation.
Can only do that in hindsight, right? And by then it's old news, right? So you need to be able to get the news out when people talk about it and not a year later. I mean, that was the same with us, right? When Movo was acquired by Baloise, we were not allowed to talk about the numbers, but anyone that was a bit financially capable would a year later find exactly the valuation that it was sold for, right? So it's not, if you know how it works, you will be able to figure it out in hindsight. But yeah, that's not when it's interesting. It's interesting at the time when it happens.
That's true.
And I'm not sure that I'm not financially that savvy, but I think as a Swiss company, you usually don't want to do these deals where you just transfer the IP and stuff like that, and then you get paid for it, because it means the money goes back into your company, and then it's not a capital tax gains free. You know what I'm trying to say? And then you're actually going to pay much more on it than you're in taxes that if you sell the company. So it's never the first solution that you're going after, right? As a Swiss company. Internationally, that might be different, but for Swiss companies, you want to sell the company because then it's tax-free for you. If you only sell the assets, the money goes back into the company, and that is not tax-free. Yeah. So usually...
You could split it up. Like I've seen that, spinning it off. So you're say like overselling half of the company, but like as a new company, and then you can go around that. But yes, Yes,
It's
I
also an
agree.
important point because I feel that many foreign buyers, they are not aware that we have this tax-free capital gains in Switzerland. So you sort of have to educate them a bit because in most countries around the world, capital gains are taxed, including in the US, for example, right? So then you have to educate them that if they do an asset deal compared to a full share deal, that is actually makes a significant difference in your taxes. Of course, it depends on the leverage, how much you can negotiate. But what I've also seen or heard is that they just don't want to do a share deal for liability reasons, especially the Americans. But then you say, no problem, we can do an asset deal, but you have to pay me the difference that it will make for me on a personal tax level. So if you do an asset deal, you just pay more. So it's not always possible. Sometimes you're with your back to the wall, especially if you do just an IP transfer or something. But in other cases, I heard that this works successfully to negotiate and say, no problem. If you prefer that, it's just going to cost you more.
It always depends, like, like how like what the dynamic is of that negotiation, right? If they really want to buy you, you can make, you can ask for stuff. If it's more of a fire sale type, then you might have to accept whatever. Yeah. And so
you're happy to get any liquidity.
So what I learned here is that this is something, if you have a good lawyer, that's the sort of thing you should let the lawyers explain to them.
Yes.
Because it's like if when we were in these negotiations in a couple of situations, it's very difficult for you as a founder that doesn't, as you saw with me, cannot even pronounce capital gain, whatever it was. Yeah, capital gain, tax-free, whatever, tax-free capital gain. I cannot even say the words in the right order. So how am I going to properly explain that to a person that is trying to buy my company? And I've had really good results by having our lawyer, which in our case was Flo Gunz from Valdevis back then, in several cases, sitting down with the other side and not the decision makers, but their lawyers and their accountants, and really explaining to them why this is the way that it is and what are the options. And then they bring up ideas, right? And then you can talk to the other negotiation party afterwards about the 2 or 3 options that might be on the table. But as Sophie said, you're not always in this luxury position that you're actually getting to decide anything.
No, it's a good reminder that whoever wants the deal less has the stronger negotiation power. It's very simple. It's the dynamics of negotiations. I want to have one last quick shout out before we do a prediction for the next episode in May. SSA, the Swiss Startup Association, also announced their new CEO, Michael Stucki. He is himself an ETH spin-off founder, and he basically took over the CEO role from Regula. I think it just happened last week or the week before, and you've probably been there at the big conference, right, Laurent? You said, how was it? You met him in person to greet and wish him all the best?
Actually, I was on 2 panels, so I didn't get to see him. But yeah, I mean, I think this is a great step. Regula was doing an amazing job the last 4 years. You have to say that. I mean, when she took over the SSA, it was not what it is today by far. When she really built that out together with the whole team and everyone around it, but she's done an amazing job. And I think she can be really proud. And now what he's taking over, and I hope he can now do the next stage of this rocket and really make sure that we have more visibility also politically, that we get the agenda pushed forward that they want to push forward. So really looking forward to his contribution in this area, and wishing him all the best.
Absolutely. Cool. Hey, looking ahead, last month I asked you for your predictions and wishes. So let's do the same. We're going to be here in 4 or 5 weeks again. What do you wish to see or to happen when we talk next? Let's start with you, Sophie, and then with Laurent.
I mean, really more of that direction, right? Like we want to see more exits. We want to see them as high as possible, right? Keep the companies, grow the companies. I don't know. We'll see if that SPACs that now was announced, if that becomes something. It would be interesting to see. Yeah. I think the bigger rounds that are happening in Switzerland and in Europe, it's also a good sign. It shows that we're getting a little bolder, that we're not just like letting the Americans control critical infrastructure, that we're also thinking about building our own companies and growing them. So I more of the same and bigger. I think the direction, definitely, since we had the first conversation in January, I think, it seems like in each session we have some bigger news, no? it does feel like it's
I feel
moving.
this one was probably the
Mhm.
biggest yet. There's a lot of like good signals that came together this time. Laurent, your wish or predictions for the next 4 to 5 weeks?
I think I said more or less the same thing the last time, and since it worked well, I'm just going to keep at it. So 2 investment rounds with billion-dollar valuations and 2 exits with billion-dollar valuations from Swiss companies.
Let's see. The bar is high. We'll do the accounting in 4 to 5 weeks from now. Wonderful. Sophie, Laurent, thank you so much for being here again with us. It was a pleasure and a blast. And we'll see you back here in a few weeks to dissect the May month, so to speak.
Awesome.
Thank you.
Thank you so much.
See you.
Bye, Sylvain. Bye, Laurent.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.